Hi, this is Anthony, parent of IRSMedic, and we have a couple of fantastic guests today. We have Jim Bennett of FairTax, and with him is Zachary. Is that right? And he's eating a delicious wafer
Well,
cookie biscuit
it's
as
the
well.
happy baby teether,
Baby teether.
but yes, it
Two,
is.
two of Jim's babysitters have bailed on him, so we're going to try to go with this. And by the way, as we say, fair tax and all the tax reform we're doing isn't necessarily for us, but it's for beautiful children like Zachary. So, Jim, thank you for joining me so much. So now you are Deputy Attorney General for the state of New Jersey. Is that correct?
That's right. I've been retired for 4 years, and no, it's been a good career. But I had to apply for permission to work on the fair tax because I heard about it in 2005,
Okay.
and I had no idea before that there was an organized movement to have a national sales tax replace the income tax. But my father told me years ago that a sales tax was more efficient to administer than an income tax, and so I didn't have to be educated about it or persuaded. I was on board when I heard about it, and all I had to do was find out, where do I sign up.
No way. So what was the moment in 2005 that made you say, "Hey, here's the thing," or were you always looking for something, or is it just so what sparked it? What?
It kind of came on very suddenly. I commuted from Summit, New Jersey to Trenton, New Jersey, which was about a 60-mile commute. And I heard this fellow on the radio named Neil Bortz, and I had no idea who he was because he's not in my market. I'm the New York, Philly market, and he's everywhere in the country except New York and Philly. And he was being interviewed by Sean Hannity about this thing called a fair tax, and I'd never heard about it. So as soon as I got home, I had to find out what this thing is all about. And so, to my wife's chagrin and consternation, I've been doing it ever since.
Well, thank you very much. And unfortunately, not enough people are interested in it, and I think too many people just sort of take the abuse, the utter abuse of our income tax, and just sort of find their own quiet way to resign themselves to it instead of getting out there and sort of learning about it. Because I think that's one of the things is as you learn about it, it's sort of empowering. You just realize how ridiculous it all is and how our government really never has the moral high ground, and how everything they do tends to be passed in a lie, and then the doors open a little bit, and then, oh, here comes everything. Now, you have been a U.S. expat. Is that correct?
That's correct. I started out with Uncle Sam in Germany,
Mm-hmm.
and I got a job with a German insurance company in Cologne called I will bother you with the name Garling Konzern, and I was one of the 0.1% of military personnel who got out of the army and stayed in Germany. I had to fly to Fort Dix, New Jersey to get discharged, spent about a week with the family, and then I turned around and took a plane back and got myself an apartment and called for my wife and child, and they came and joined me, and I was 3.5 years in Cologne. So I'm very well aware of what the tax situation is for expatriate U.S. citizens. And there were two key differences back then. I couldn't vote in a U.S. election. That's changed now because now I can vote for federal offices if I were to go back. The other difference was we didn't have FATCA back then, so I was able to open bank accounts. And now U.S. citizens are saddled with that additional burden, and it's totally unnecessary. What do you think of FATCA, Zachary?
Yeah, no,
So,
no, yeah. See, he just got sad. Oh,
that's right.
the expression on his face, he knows he's thinking about all our dear viewers and people suffering around the globe with it. In fact, it is, one way we could consider to get out of our citizenship-based taxation. That is, U.S. expats around the world are being taxed on their worldwide income, and they might not have any connection to the U.S. And by the way, they're getting taxed in the country of residence. And by the way, even if they file their taxes, there's going to be a foreign income exclusion or foreign tax credit that may make them owe nothing after they jump through a bunch of hoops to prove they know nothing. Now, One movement of the tax of the expats is to try to switch to a residency-based taxation, but as I understand it, FairTax basically is inherently a residency-based taxation because it's a national sales tax, not an international sales tax.
Precisely, Anthony. It has the fair tax only taxes consumption that takes place in the United States.
Okay.
And it doesn't care whether you're an American, whether you're a foreigner, whether you're an undocumented non-citizen or documented non-citizen. If you're in the United States and you buy new tangible goods or use services, you pay the tax. That's it. And so if you consume goods and services outside the United States, you don't have to worry about federal taxes anymore. So as you say, it's inherently a citizenship-based taxation and it goes even beyond that. It's a consumption-based taxation for consumption in the United States. That's it.
So now tell me a little bit about how it works. Now it's a national sales tax, and now is there a proposed rate? You said what does it apply to services and new goods? Could you run over some of the brass tacks with us?
Yes, exactly. Okay. What the fair tax does, first of all, it's a bill in Congress. It's not a pipe dream. It's HR 25 if you want to look it up.
Okay.
And what the fair tax does is it replaces, and the operative word is it replaces, it does not add on to subtitles A, B, and C. Those are your income taxes, and that includes your taxes on wages, your taxes on capital gains, your taxes on interest, dividends. It also replaces death taxes, and it replaces your self-employment and payroll taxes. Now, it doesn't replace the program, so Social Security is still there. It's revenue neutral. So Medicare, Social Security don't go away. They're just funded from a different source than they are today. And it's a source that's broader and it's more stable than today's income and payroll taxes and death taxes. And the taxes on new tangible goods that are sold in the United States to a consumer at retail. There's no tax on business to business. There's no tax on export. So you can imagine what happens to the economy when you shift the tax base from income to consumption. And it is a consumption tax. So of course, people are going to say, and justifiably, that this tax is unfair on low income people and people at the bottom of the economic scale. So, well, first of all, we get rid of what we call embedded taxes. So there's no corporate income tax, as well as no individual income tax, and there's no corporate portion of the payroll tax. So theoretically, if there's any modicum of competition, and if there's any elasticity of demand, the pre-tax price goes down before you put the tax on it. Also, it gets rid of the payroll tax, which is one of the most regressive taxes in our inventory. Don't you think so, Zachary? And then you have then we have what we call a refund in advance, and we call it the prebate in our jargon. And that goes to every household whose members are lawful residents of the United States to untax that household for consumption up to the poverty level. So what you end up with is you have no income tax, you have no payroll tax, and above the poverty level, everybody pays tax on consumption at the same rate. So there you have it.
All right. Well, so now, you know what I was just thinking as you were talking, you know who really wouldn't like this? Okay, here's who I'm thinking of, a state like my own state, the state of Connecticut. I don't know if the state of Connecticut would be so hip to this because, well, here's the problem. We already have a sales tax in the state of Connecticut, and then there'd be another tax on top of it. And here's the thing, too. In the state of Connecticut in 1991, our good Governor Lowell Weicker proposed a temporary income tax to get us through a little rough spot in 1991. And that temporary income tax is still with us. Now, the way it works, it's actually pretty easy for our Department of Revenue Services, and the way it is for most of them around the country. It's only when their tax code deviates from the federal income tax that we run into problems. The problem is this, is that Connecticut gets sort of free money on top of it. Hey, you have to file a Connecticut tax return as well, along with your federal income tax return. Now, the state of Connecticut, I don't know if they've ever audited an income tax return. They just go off the federal number. So whatever the federal number is, if there's an adjustment to the federal number, they make their corresponding adjustment.
Mhm.
So the problem that I see with this is that you have states like Connecticut, New York, California, that are absolutely Massachusetts. You have a lot of states that are absolutely dependent on their income tax. What this is doing, it's taking away that main sort of conduit to funnel their income tax, so, to report their income tax so everyone can kind of grab it. So I would expect to find keen resistance from states that would see this as a mortal threat to sort of more or less their monopoly on imposing a sales tax. What do you think of that?
Well, that's an interesting thought. We have there are 5 states in the union that have no personal income tax. And in a way, you're right, because many of these states that do have personal income taxes, including my state of New Jersey, base their state income tax off the federal income tax. So if you yank the federal income tax out from under them, there's no way to impose a state income tax. So that would be a problem. Now, we do, there was a study that was undertaken, I think, in 2006, 2007 by David Turk. The name of the paper is called Fiscal Federalism. And they did a study of what it would cost the states to replace income taxes with and their current sales taxes and their current death taxes with a state FairTax style FairTax with prebate. That's the what you get at the beginning of the month in order to untax the household. In the case of New Jersey, it would be, and these are 2006 figures, so the numbers have shifted around a little bit, but the methodology is the same. It would be 5.52%. And the reason we can have a state sales tax at 5.52% that is lower than the current sales tax alone is because you have a broader base. But yeah, our strategy at FairTax has been that this has to go to the grassroots, because if you go to politicians and if you go to lobbyists, they're wedded to the system the way it is. They like the status quo, and they're probably not going to be the ones who move. So that's why our strategy doesn't. We obviously have to deal with the politicians, but what we try to do is to get groups going in the various states. So that's. But yeah, I think the resistance would come from some state governments and from some and from lobbyists. In New Jersey, we do have a member of the General Assembly whose chief of staff likes us and has decided they're going to put drop a resolution into the legislature supporting the national sales tax. So here we are in a blue state, and we think, well, that's may not get us over the finish line. At least that's something, and that'll help the states that do have serious initiatives going to get the FairTax on its feet. We have Alabama, we have Alaska, now we have Georgia, and we have Nebraska. In Nebraska, we expect the people to vote on a constitutional amendment in 2024 to repeal all forms of taxation except consumption taxation. And then when you add the prebate on, you have the state level fair tax. And if we can get one state on the scoreboard with a state level fair tax, then that's going to put pressure on sister states to form.
Okay, interesting strategy.
And then the pressure will go up to the federal government. So that we think is that's our secret sauce at the moment.
Yeah, that's pretty good. And I think people really need to know what you were mentioning before, because the criticism, right? It's a regressive tax and, this and that. I don't think people understand how incredibly regressive taxation is right now already, because as you were mentioning, payroll tax is a function of your of your income. And someone who's making, $10 an hour, well, actually you have to pay them more. And that gulf between that is called a payroll tax as an employer. And the idea is like, well, if they didn't have to pay the tax, your employees would get paid more, but that hidden tax. And that's why the payroll tax is so successful, if you will, because it's so hidden. Most people don't know their wages are devalued by a substantial amount before they even see your withholding. Before you even get to the point, they already took it from you. There was a taking you didn't see. And I think that's a really, really important point to get across, that every minimum wage worker, the people who can least afford it, pay the same rate for payroll taxes. And people just might not be aware of that. So when we're saying it's bad, it's bad. Now, here's something I'm thinking of, because I think this could get a lot of support, especially from people who are concerned about privacy. And I think that's a huge issue, the privacy. We have people want us subpoenaing tax records, and people are looking for things within a gotcha moment. The IRS is free to open up your entire life, any part of their life, if they suspect it has something to do with your lifestyle, which is everything. That's everything of your life is a complete open book. The 16th Amendment, the income tax, took the 4th Amendment and it's a shotgun and blew it away. We have a few words dangling here and there, but they don't mean anything, right?
Exactly.
And we're believed to think we have protections, and we really don't. Now, I didn't hear this before. What is the proposed tax rate of the national sales tax rate?
Okay. We say 23% tax inclusive.
Okay.
Now, what does tax inclusive mean? It means the cost of the good, including the tax. So if you buy a pen at Staples for $1, 23 cents of that price is the tax, and 77 cents of that is the actual cost of the pen. Now, is that being cute? If you think about it, how are income tax rates expressed, how are payroll tax rates expressed, and how are death tax rates expressed?
Yeah.
Tax inclusively. So we think that this enables an easy comparison with income taxes and payroll taxes.
So
that would be a revenue neutral rate. In other words, it would replace the subtitle A, B, and C taxes, the income taxes, the payroll and self-employment taxes, and the estate gift and generation skipping taxes. So they all get swept away along with the IRS, and they get replaced with a 23% tax inclusive sales tax rate.
Well, I guess actually it would be more like, because the states are going to have theirs too. So we're really looking at a 28.5% sales tax rate on everything new and every service. Is that right?
That's correct. No exceptions.
Okay.
And
Well,
the key is no exceptions, because we take care of that with this, take care of the regressivity problem with the prebate.
a 28% sales tax rate will create
Yes.
problems, will create strong incentives to not be subject to that, I would say. And historically, we had high sales tax, or tariffs, if you will, in 1828 were passed, and they were 25%. And they impacted the southern states incredibly hard. So much so, South Carolina was ready to secede until President Andrew Jackson intervened and he lowered that tax rate. Now, I already know the counter to my argument to say that this is too high. I think the counter argument to that is to say, well, people in 1828 had nothing to compare it to. They went from low tariffs and pretty much modest taxation to where the point was a 25% tariff seems outrageous. Now, the question is, does a 28% sales tax on everything new, no exceptions, in all services, will that shock the conscience? And maybe not, but here's what I think you might have as a problem: that you're too transparent, that the fair tax is too transparent to be politically viable. That one of the great reasons why our federal income tax mass exists is because it's so confusing. And people don't know where's which, and everybody thinks someone else is paying for it when really it's them. So my
Yeah.
question, so what do you think? And you, so it doesn't apply to new goods.
It only applies to new goods.
I mean, I'm sorry. So it doesn't apply
Yeah,
to anything used,
correct.
and
So
nothing is exempted
that's correct. So that's
unless someone's income level falls below, then they can claim their prebate, as you will.
the prebate is independent of income because we don't
I'm
want
sorry.
to. Yeah, we don't want to penalize people for improving themselves.
Oh,
So
okay. I don't quite understand that. Then can you
yeah,
explain that? I don't think I understand how that
well,
works.
okay. The prebate. This is the payment that you get because remember, sales taxes are basically regressive. And we don't deny that. We think there are a couple of things that moderate it, but you get every household in America whose members are lawful residents get a payment from the Social Security Administration because there's no more IRS, so there's no more IRS to make the payment, and that untaxes that household for consumption, tax on consumption up to the poverty level. So we don't determine the poverty level. Health and Human Services makes that determination, and we just say whatever the poverty level is, that's and whatever the tax is on goods and services up to the poverty level, that's what you get back at the beginning of the month every month. So that's basically how we deal with it instead of saying that we're going to carve out green eggs sold on Tuesdays, Thursdays, and Saturdays because the green egg lobby was particularly potent. So that's why and I like your comment that I think the tax is very transparent because now corporate taxes, they get passed on to consumers in the way of higher prices on goods and services, as well as any kind of a business tax. And the same thing with the employer portion of the payroll tax. So those two things go away. So all taxes are basically borne by the consumer, and the consumer sees the cost of government. Hopefully, we'll see that if you give an exemption for the green eggs on Tuesdays, Thursdays, and Saturdays, you're going to have to make up for the shortfall by raising the rate on everything else. And so hopefully we think consumers will get smart, and if politicians try to give carve-outs and people see their taxes go up, a lot of people are not going to be very happy.
Yeah, and as I'm thinking about this, I can think of a million things that could go wrong on this, and a million things to think about and complications to have. But in my mind, as I'm running through everything, like, oh, that's going to be a problem because this, and this, there's at least a current analog with the IRS that's worse.
Mm-hmm.
And so while I could say this is not perfect, here's the thing that I think is really interesting. And actually, I would like to give it a try because why not? I mean, with what we have, why not? And this is what I'm thinking of is that when we say an income tax, what do we mean by income? And the Supreme Court has defined it to some degree, but it's actually really kooky. Their definition of income makes no sense. It really is illogical and it's hard to follow. So we have an income tax where the definition of income is like, well, it means kind of this, but then we'll make it little exceptions here and there and make it really hard to understand by what we mean by income. The thing with a consumption tax, I think that's a little easier to understand. We could at least define consumption as saying, well, you got a service and you got something new. Okay, that took 2 sentences to say. And you could probably put that in 1 sentence. So at least there, we have something that's definable so the people can see it at least to say, oh, that's what it's doing. Maybe we want that. Maybe we want something else. So I think it would be a great, I mean, I would say, yeah, no, I think there's problems with it, but let's be honest with what we have now, right? I mean,
I really like that because there are 2 reasons. Our economist says that the income tax code is as complex as it is. And that's because you're going to have disputes about 2 things: the identity of the timing of the taxable event, and the identity of the identity of the taxable the subject matter. So you're right. Income, it's not an easy definition, and you can try to define it a priori and then try to apply it here, there, and the other place, and it's just not going to work. Whereas you're absolutely right. What happens with consumption is we pretty well know what new tangible goods are sold at retail, and we probably know what services are performed to a consumer at retail. So it's that's why the FairTax bill is 130 pages long, wide margins, double spaced, and it's so simple. It's even we know a child can understand it, but maybe even an adult can understand it too.
Yeah, that's right. I think it's great that you're working on it. And I think it's great that you guys are getting together and getting some organization going, because I think this is it. It's like the thing you don't want your awful tax system to be hidden, because that's where it gets even worse. This puts the taxes in it's kind of a high amount, but at least it puts it right in someone's face to say, here it is, because there's the other side of the equation. The thing is about the hidden tax code and the hidden costs, we seem to have the hidden spending as well. Like, who authorized that? Where's this money coming from? Why is it sent overseas? What's going on? Can we not have our money do that? And I think the thing, and what I could see as a function of people, here's your taxes you're paying, is that people say, you know what, I think we should lower these taxes by virtue of reducing the federal budget, to say, do we really need all of these things? The nation has experienced its greatest peace and prosperity when we had low tariffs, which I would say would be a precursor to income, to a sales tax. Our greatest peace and prosperity by far, as soon as income taxes come, there's war. There's war, and then there's more war. And it's because of, and I think it's a lot of that has to do with that hidden function of it. So I really, and I think it's something, and it's alarming. And here's my observations. It's alarming to consider that it would take a 28% tax on new goods and services to get rid of everything else. Mm-hmm. Because on one level, it seems too high, but the reason why it seems too high is because all these other taxes are hidden. Many of them are. We don't see it. We're not impacted by it. Your withholding takes care of it. So you don't have to worry about making a big payment. Hey, it's tax refund day. Tax day is a good day, So that's how it gets so hidden and gets us indifferent to just how awful our tax dollars are being sent. And so do you think the fair tax would give Americans more of an incentive to look at the other side, that spending side?
I think it would. And actually, if you want to make it 28%, including state taxes, if you look at the marginal tax rates today, that's really not higher than today's marginal tax rates. But I think to your larger point, yes, if you make the cost of government as transparent as the fair tax makes it, and it's I think to go on one of your other themes, it's almost a voluntary tax because you control when you pay tax and how much tax you pay. But except for borrowing, which that's a topic for another day, you see how much your federal government costs, and you're absolutely right. What people would start doing is making they might start questioning the government spending, and that nobody does, especially up here in New Jersey and in Connecticut. You have a lot of people who think a lot of them make a lot of money, so they don't care. But especially here in this town, but I think nationwide you'd have a big problem with what people would say if you start raising the rate. So yeah, I think transparency is the name of the game.
And I think right there, you know what? I think I started off a little, not so sold on this, and I don't think it's the ultimate solution. But I think it could be a really, really helpful tool. And I think it's really that function of transparency. That is probably the best and worst thing it has going for it, to make us all aware exactly how much we're being demanded to pay. And then maybe when we actually see that number, We'll start asking some hard questions about how the money is being spent and where it's coming from.
Yep. One of our mottos is, the fair tax, once you understand it, you'll demand it.
All right. So what should people?
The big problem is getting people to understand it.
So people interested in the fair tax, what should they do?
Well, first of all, they should go to www.fairtax.org. And if you want, I would encourage you to scroll down if you like what you see, and put in get information. And that'll get you on our weekly email list. You'll get the fair tax guys, whom you know very well.
Yeah.
You'll get our chairman's report from Steve Hayes, and you'll get my little column called Grassroots Corner. And we think the important thing is to get people regular exposure to the idea, because the average adult needs about 7 exposures to an idea, according to an advertising research firm, before it registers. And then once it registers, there's a number of things you can do. We think what we're trying to do is to get people to find other people within their state, within their community, who are sold on the fair tax, and maybe have a date to get together periodically and figure out what are we going to do now, because the people in the states know best what goes over in their states. Obviously, what goes over in the South, you can get into some of the more patriotic things, and here, I think in northern New Jersey, and particularly in my community, you have to be a little bit more cerebral about it. But
yes, I know what you mean, my friend.
Yeah. No, but it can be done. I've known some people who are Democrats, and if Teddy Kennedy were alive, they would be 5 miles to the left of Teddy Kennedy, and they love the fair tax. And I think what sells them is fairness, because they see that even though it's a sales tax, it's with all the things that are built, the bells and whistles that are built in, it's actually fair, and it helps people at the lower end of the economic scale. So those are all things you can do. And then obviously write letters to the editor, because we have electronic newspapers now instead of paper newspapers, but the concept is the same. You can contact your Congress representative, and if you can get a group to do it, then they start to listen. I think if it's a one-off letter, you'll get a form letter back. But if you get a group and you keep hammering away at it, then we found they start to listen. So hopefully I hope to get a co-sponsor from New Jersey, because we just changed our party here in the district that I live in. Fair tax is nonpartisan and it's single issue, but we can't be blind to trying to get it through Congress, because those are the people who have to take the action.
All right. Well, if you enjoy transparency, I think you'd like the fair tax. It certainly beats what we have going on. And I want to thank our special guest, Zachary. What a magnificent job you did today, my friend, giving us the inspiration to perhaps fix our awful, awful tax codes for better future for you and your friends. Thank you very much, Jim. I've really enjoyed having you on
what do you
here.
Think of the fair tax, Zachary? Yep.
I think it's great. There we go. Fantastic. Thanks again. Thank you, everybody, for joining us.
Anthony.
Great having you. Goodbye, my friends. Have a great day.
Bye.